Hi guys, welcome to my most favorite day of the week because I get to interact with you. I'm Lynette Zang, CEO and founder of Zang Enterprises, and we support community, which is what this is all about, and sound money globally. So obviously yesterday was a crazy day and we did an emergency live video, and today the last I saw, so I don't know where things are at this moment, but the last I saw earlier today, we were in that dead cat bounce that we talked about. But what was that little teeny snowflake that pushed the markets over? Of course, they've been having some gyrations and some problems over the last couple of weeks, but what pushed it over is the weak job reports. And oh, by the way, if you don't mind, please hit that like button right now so you don't forget about it on the way out. Leave us a comment, subscribe, share, and let's just talk about weak job reports. You should always wonder what you're really asking for, because the Federal Reserve, the central banks, and this is true globally, all wanted unemployment to go up, because in theory, it's the public asking for more money in their pay that destabilizes the pricing, that creates that inflation. What do the central banks call stable prices? Now, for you and I, we'd think, well, that gallon of milk stays the same price over time, and that's a stable price. But for central banks, their definition of price stability, of those stable prices, is an inflation rate that's low enough that you don't ask for more money at your job. So, as we know, with the inflation being so apparent, the central bank's struggling to regain their version of price stability. Well, that also means that workers have to lose choices, right? So here's the weak job reports, push gold to an all-time high. Let me tell you, even on the spot market, it is not reflecting its true value. So here's a spot market on gold through yesterday. And what I want you to pay particular attention to is this little gap. It gapped open. So it closed down here, and then the next morning when it opened up here, and it creates that gap. Now, we've talked about this gap quite a bit, not just on spot gold, but on anything. I showed you that yesterday on the markets, how it had gapped down. So it closed up here and opened down here and created that gap. At some point, and I can't tell you exactly when, but at some point, all gaps get filled. So just like we're seeing the dead cat bounce, in other words, the markets move up, whether or not it's going to completely fill that gap or not, there is a lot more pain to go. And with spot gold, two things. Number one, technically it's got to fill that gap. But number two, with the stock market dropping like it did yesterday, there are entities that have to sell their gold contracts to generate money to pay those margin calls. In other words, to put more cash in their stock accounts because they borrowed at a certain level to buy those stocks. So there's a couple things that are going on with this, but I want you to really understand that the spot gold contract is just a trading vehicle and a perception management tool to get you to think, gold, who wants to buy gold? Bleh, right? At the same time that they're buying gold hand over fist at the fastest rate in history. So that's just one of it and how it impacted gold, but let's take a little bit deeper dive. U.S. hiring significantly slowed. So the economists were anticipating a much higher number than what they got, and that was shocking to them. So job hiring is slowing faster than what the central banks are wanting. And at the same time, jobless claims, so new claims, hit the highest level in actually well, this just goes back a year. So the jobless claims are growing and the continuing claims. So those that are out of work are having trouble finding new jobs. So they're staying on unemployment longer and more people are filing for unemployment. Can you kind of see the problem? Especially since the consumers, these are the consumers. And are they able to consume as much if they lose their jobs and they can't find new jobs? So much as we're hearing about this soft landing, no landing, oh, this is going to be great, oh, Goldilocks. Historically, that is not supported. And in reality, I got to tell you, there ain't going to be any soft landing. There can be if you're prepared. So if you're in the right place with the right asset, remember the strategy, the sound money strategy executed by Zang Enterprises is built on layers. So it depends on where we are in this trend cycle so that you have what you need to get over that next hump. But that's not the only gauge that is showing a more rapid softening in the economy. There's also the manufacturing gauge, which is a huge part of the GDP. GDP is gross domestic product. That's all the money that flows through the system, right? And so manufacturing gauge is really critically important, and that dropped to an 8-month low. Not only that, you can also see how it's been systematically declining. So what are they saying? There are cracks forming in the U.S. jobs market. You think with all of the layoffs that are coming about and fewer hiring, can you see how are these corporations going to be generating more money? I don't know. I just did a video on that. You might want to watch it from last week. What's the title of that? Because you don't have it up there for me to see, Adam.
Which video again? I'm sorry.
The one on AI, yeah, right?
Correct. It's now called. The title of that video is "Greedflation plus AI equals you pay more."
Exactly. So understand that those that are in a position and have work, if everything you're doing is intangible and you use your credit or your debit card or something like that, you're now, have you noticed there are no prices on things? You are likely to pay more because of where you live and your zip code and the data that they've gathered on you. You want to definitely make sure that you watch that video. It's a very important one. But a PMI, so Purchasing Manager Index, reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.3% of the economy. So, and it's been below, this is just going back a year, it's been below 50. This is 49.9, and it's been consistently declining, which is not good. It's showing that people aren't buying as much. They don't have to manufacture as much. So we are watching this slowing economy, which is not a support with stocks at nosebleed levels that they had to correct. They're still at nosebleed levels. But the dollar eyes the worst day this year as jobs data boosts expectations for Fed cuts. So what does all of that gobbledygook mean? Well, first of all, they're talking about a relative basis. So it's the dollar against the yen or the dollar against the peso. So it's one fiat currency versus another fiat currency, and they're going to work opposite each other. Unless they're pegged, and that's another story for another day. So when they say dollar eyes the worst day this year, it also is hinging on interest rates. We have seen a very rapid rise in interest rates, which, remember, okay, interest rates, market value of debt, right? So as the interest rates have gone up, all of that debt that the banks put on their books and their corporations put on their books during that 15-year period of zero interest rate policy, well, that's all way underwater. But in theory, with the interest rates up that high, it attracts more foreign money to buy dollars and dollar-denominated assets. So, if the Fed is going to lower the interest rate, that makes the dollars and those assets much less attractive. So that's why it says dollar I's worst day of this year, because the anticipation that with this market rate, the Federal Reserve is going to drop interest rates all the way down. What does that also do to the market value of all of that debt? It pushes it up, right? It also makes it a whole lot cheaper and easier to borrow and spend. So we have yet to see the response from the Federal Reserve on interest rates, but that's coming. That's coming. The dollar slide underscored that investors' focus was on the relative path of global central banks, outweighing potential demand for the currency as a haven with angst about the economy building. Something else I really want to point out to you is we talked about that decoupling, that shift in behavior of the global central banks, where they were working in a synchronized fashion. So there's really no place to escape. So they were all raising rates at the same time, but they are not lowering them. Some countries are lowering them. The Fed is staying the same. Some countries are raising them. So that also creates a lot more volatility and a lot more fragility in the global markets. I will be doing something on that because we've talked about all of this. This is a con game. Con games require confidence. Central banks know that they will each do what is in their best interest, or at least what they think is their best interest to do. No longer synchronized. That's another reason why we saw what happened Monday. But flight from stocks accelerates at fears grow. Fed too slow to cut. This goes back to that Goldilocks, announcement. Oh, soft landing. Historically, a soft landing has never, ever happened. And the central banks, frankly, they're never, ever, ever, ever right. Why does anybody listen to them? Because their job is really to keep you in the system, making it much easier for them to transfer your wealth their way. So, too slow to cut, which means that we are entering recession. And there's also a video that is coming out probably tomorrow or Thursday, I don't know, whatever the schedule is, on the sham rule that shows you another indicator of recession. But for those that have lost their jobs and are having trouble finding new jobs, probably already a recession. This is a reminder for stock investors to be careful of what you wish for. Now, if the Fed can do a gradual decline in interest rates, which they may test, they may very well test it, and they may very well wait until September. We're going to have to wait and see what they do. But the bottom line is they're going to have to be maybe more aggressive than they would have otherwise been because they're losing control. We're going to talk more about that. But treasuries surge as Wall Street pressures the Fed to ease policy. Who is stronger, the markets or the Fed? The Fed has interest rates and money printing. That's what the Fed has. The markets have unknowable amounts of debt and leverage in the system, which is far greater than the Fed's ability to print their way out of that. Now, a lot of people liken what we saw yesterday to 1987. Black Monday, 1987. I was there. I was a new stockbroker about a year in. I've told you the story before. If you want me to repeat it, just let Adam know, and I'll tell the story again. But essentially, the difference between what was happening in 1987 and what is happening today is that in 1987, have you guys ever heard of the greedy 80s? And we had Dynasty and big shoulder pads, and everything was about over-the-top spending and opulence. That is because every single time they want to transition us into a new system, they let the public think that they have so much more money because of the choices that they made. So when they took us off the gold standard, which creates fiscal responsibility and puts limitations on what central banks and governments can do, well, once Nixon handed over control of inflation to the central banks, that generated a whole lot more new money and the greedy 80s. So yes, those stocks were severely overvalued by 87, and there needed to be a huge correction, but that was the beginning of this debt-based experience and experiment. And you know what the difference is? That was the beginning, and this is the end. And the firepower that the central banks had with both interest rates and money printing are gone, gone, gone. That's why you need to have physical gold and physical silver in your possession, along with food, water, energy, security, barterability, wealth preservation, community, and shelter. That's why you must get it done. So click that QR code, hit that link. Make sure your strategy is in place. And by the way, we are working on this diligently. We will be bringing out a YouTube channel. I'm so excited and so glad about this shortly for the rest of the mantra, because you need it all. And fortunately, in the Zang Enterprise community, we have a lot of that talent, and we're all here to be of service in any way that we can. All right, let's go on. So treasuries surge as Wall Street pressures the Fed to ease policy. So we know if it's like this, right? Interest rates, market value. So a lot of people buying treasuries in a flight to safety, which really is out of the frying pan and into the fire. How do you have safety in debt? You don't. You don't. It may look like it for a minute, but anyway, pushing the interest rate down and the principal market value of those treasuries up. Flight to safety. But this is where you can see they were anticipating 175,000 job forecast for July, and they got 144. They were anticipating 4.1% unemployment, and they got 4.3. And remember, everything is sort of, mushed, and the formulas can be kind of mushy and nobody can really know. So we don't even know if any of that's true. But okay, let's assume that it is for a minute. What's happening is the recalibration came after the Fed kept its rate at a more than 2-decade high at its policy meeting this week. So that's why they're worried. They should have, what the market wanted was because the market's been having heartburn for the last couple of weeks or so. The market wanted the Fed to lower rates on last Wednesday, and they didn't. They kept them the same. That's why they're concerned that they waited just too long. It's all just a Ponzi scheme. It's all just a nasty joke. But a rise in unemployment claims, weak manufacturing data, and now the jobs data are rattling investors, sowing concern that the central bank has waited too long. The central bank is never right. But, without the forward guidance, which was the key tool that they used since 2008, we're going to tell you what we're going to do, banks and Wall Street, so you can get into a position to benefit from it. And then all of a sudden they decided they don't need to tell them anymore. So that was the decoupling of the confidence of the markets to the Fed. And now we're in this battle. And the markets are fighting the Fed. There used to be an adage, don't fight the Fed. Well, that's gone. That's gone. And so what I'm seeing is that the Fed is absolutely losing control. And not just the Fed, all of the global central banks. They don't know what to do. That's why they're no longer working in a synchronized way. But JP Morgan, Citi now forecast 2 supersized Fed cuts this year. What does that really mean? That means crisis. And that's the only tool that they have, is to drop interest rates down to encourage borrowing and spending and lots more cheap money in the system. And I gotta say, you get all that money for free in this system, well, guess what that does to the money that's already out there? Makes it worth less and less and less, until it's like all these other currencies that no longer have any purchasing power value. And even officially, we only have 20 cents, or 20 cents, what am I saying? It's been a long day. 3 cents according to the Federal Reserve Fed chart. But there is a shift that's happened that's made me very, very nervous, and you need to know about it. And that is the 2-year yield, which you know we've been dealing with an inverted yield curve that, at least on the long end, has uninverted. We're going to be talking more about that when I do the video on the sham rule coming up. But the 2-year yield is below Fed's policy rate the most since 2008. Well, I got to tell you, this is 2008. It's barely above, but this red line is the Fed policy. So let's follow that all the way back to the 70s. Nobody ever talks about what was happening in the 70s and the early 80s as we were transitioning from at least a quasi-gold-backed system into a full debt-based system controlled by the central banks. Forget Congress. Right? Forget our elected government. So let's look at that, because it may not look like it's too much, but frankly, the markets don't believe the Fed anymore. This is a con game. It requires confidence, and there's only one vestige of confidence left, and that's the public. And what's about to happen in this pivot with all this new money that's about to be printed is that inflation will heat back up to a very noticeable level, and it never really subsided. You know, I mean, Janet Yellen can't figure out why the public isn't happier about this. Oh my God, she's so disconnected from reality. But that means that they're going to notice, and that's what's going to trigger that last little bit of confidence in the dollar, in the central banks, in those that are in control. Because this is the transition, just like 2008, look, much higher, right? Much lower. Maybe I should have maybe even magnified that more. But what we're entering is far more like this transition over here. Because again, this is the beginning. We are now at the end. Beginning, end. Not a good place to be. But maybe that's why we are seeing a new gold rush, not just by the global central banks, who we know have bought more gold in the first half of this year than ever in history. But look at this. Total gold demand reached its highest Q2 on record. And the key about this is that, my goodness, this is jewelry, ETFs and similar products, technology, central bank net purchases, total bar and coins, so individual investors, and OTC investment and stock flows, which are some of the derivatives, but do not reflect all of those derivatives that are in the system. But the point is that total gold demand reached its highest on record in Q2 of this year. We are at the very beginning stages of our modern day gold rush. And the sooner you participate, because let's make that a silver rush as well, the sooner you participate, the happier you're going to be for it, the cheaper it's going to be in terms of this. But keep in mind, those spot markets do not reflect reality. They reflect a trading environment. And the real job of all of those markets is to keep you in intangible fiat money wealth, to make it easier to transfer your wealth their way. But I say, how about it transfer our way? What a concept. And really, the sound money strategy is simply based upon history and its repetition so that you can be positioned into the most likely, the right place at the right time with the right asset. You've got to have something that holds its purchasing power. And the reality is when you're going into this kind of fight, you want the kind of asset that has the broadest base of functionality and the broadest base of demand. So just those jewelry, ETFs, technology, central banks, bar and coin, and OTC, that's not all of the demand. It's also in food. It's, I guess, electronics would be technology, space travel. I mean, it's used everywhere. Broadest base of functionality, broadest base of demand. How about this stuff? One place. How about this is an image of a gold Bitcoin. It's not gold. It's not real. How about this stuff? Because gosh, didn't they just find, shockingly, in its first test of cryptocurrencies, not digital gold. Not used in one place. And while it uses up energy, it doesn't store that energy. This uses energy, but it stores it, and it's used in every single sector of the global economy. So now I'm going to take questions, but I'm going to start with a question that was asked yesterday, and then we have some other questions, and then I'll take them live. And the first question was about the premiums. And so I got with our wholesaler, and he told me that while the premiums on like bullion gold, so like the American Eagle has gone up a little bit, he really hasn't seen a huge jump in the premiums. But of course, this kind of straddles two worlds, right? It straddles the spot market world, but it also straddles the industrial world and how it's used. So this is more guided, and actually so is this. This is also an ounce of gold, but this is a pre-33 raw coin versus the American Eagle, okay? So very minimal premiums on these. They haven't grown that much yet. But he's going to keep me informed of what's going on in these markets. So let's see. And Adam, what other questions do we have?
So we actually have some questions from Instagram because our live went so well yesterday. I'm guessing some people followed up with us there. The prompt was, what questions or concerns do you have about the stock market crisis now? And we'll start with the first question from G. Built It. Who is going to maintain the road? And I'm guessing he's saying...
Oh, that's a really great question. But what happens, unfortunately, as we go into hyperinflation, services go down and your taxes go up. Therefore, you better have the gold. I can tell you in my bug out location, I'm the one that maintains the road. So it's not just the roads, it's also your fire departments and your police and your teachers. I mean, they are on, minimal salaries as it is, and their incomes will not keep pace. So a lot of times what we see is they'll continue to work for a while, but obviously they have to get paid. So yeah, who's going to maintain the roads? Yeah, ultimately, you're going to have to maintain your own road, to be honest with you.
Next question was from Bliss. Balanced life in small steps. Is the impact the same for the whole world?
Well, yeah, unfortunately, because this is a global issue. Think about this. The money is created from debt, and it doesn't matter whether you're in China or you're in the U.S. or you're in Venezuela or anywhere else. The money is created from debt. And so they can do that as long as there's enough confidence in the market to continue to use the money. Rapid inflation changes that dynamic because the public starts to realize the Ponzi scheme. So what was the question again?
The question was, and I'm sorry I'm a little quiet on my end, guys. I want to make sure you hear Lynette really good. Is the
Thank
impact-
goodness we've got everything seems to be working so far today.
Yeah, so far so good. I know I'm a little quiet. I'm sorry, guys.
That's okay.
I'll turn me up a little bit, but I don't want to take over for Lynette. So, is the impact the same for the world?
Oh,
right. Is the impact the same for the world?
yeah. It's just going to be the timing, and it's going to be the emerging markets and the frontier markets that are going to feel the pain first. But that wave will go over the whole world, and unfortunately, yes, the whole world has to reset economically, financially, and socially.
Next question was from CME_CME. How do we know when it is leveled out so that we can jump in and buy some stocks at low prices?
Okay, well, we're going to look for that cup formation, right? I show you that all the time. And what that is an indication of is that is an accumulation pattern that the smart money recognizes an undervalued circumstance. However, to be perfectly honest with you, because I'm an ex-stockbroker and an ex-banker, so I have a high level of comfort, what we don't know is how much real debt and leverage is in a lot of these companies, right? Because the grading services has hidden that from us. They've allowed so many companies that should be rated as junk to be triple B, which is investment grade, which means they can put it in all of these different ETFs and mutual funds and pension plans and retirement plans and all of this when they really were not graded that way. And the banks supporting the zombie companies that haven't earned enough money to pay all of their interest, forget any principal. So the banks, not wanting you to know that, have just loaned them more money. All of that garbage has to be wiped out, right? Then we're going to see who's able to survive this mess. Leverage looks great on the way up, but it decimates everything on the way down. So have patience, because I imagine, right now I own 0 stocks, but that hasn't always been true, and I don't imagine that will always be true. But right now, with all of the fancy accounting that they do, it's just too hard to know who's solvent and who's not. So what I do know is when they do those overnight revaluations, and I've shown you this tons of time, the stock market too gets revalued. Now, that may or may not be the time to buy it. We're going to have to wait and see, but I'll let you know when I'm buying, and I'll also let you know what I'm buying. And then you get to make your own choice of what you're going to do. Right now, or actually 100% of the time. 100% of the time, what I'm trying to do is work with and accumulate an undervalued asset that is in a long-term positive trend. How do you know it's in a positive trend? Look at the long-term graph, even with the manipulated spot market, and what you're going to see is a series of higher and higher lows. Here's a guarantee. Can't give you many, I can give you this one. If you continuously get higher and higher lows, you ultimately will get higher highs. Well, you want most of your wealth in an undervalued asset that is in a long-term positive trend, and the least amount of your wealth in an overvalued asset or instrument that's in a long-term negative trend. Well, the stock market, right? They want you to think that it's going up, 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 up. So to your point, when can I buy the dip, right? We've been trained to buy the dip because the Federal Reserve will come in and print all of this money. I wish they would be out of it. And print all of this money and reinflate the stock market. But when they do that, all it does is hide from you the real trend, which is in the purchasing power. Because whatever you own in stocks, you can only convert that into this stuff. That's all. You can only convert it into that stuff. And like I've said a gazillion times, 1 trillion times 0 is 0. Just like this, well, here's a 250 Central Bank of Iraq, an Iraqi dinar. And I know a lot of people have bought dinars thinking that they're going to be renominated as a currency. Once a country denominates, says, okay, because if a government can say, oh, this is money, they can also say, no longer money, right? So once a country demonetizes a currency, they've never remonetized it. Could this time be different? Well, I suppose. I mean, that's not something I have control over. But if it walks like a duck, lays eggs like a duck, flies like a duck, and quacks like a duck, I mean, come on. It's probably a duck.
Okay, guys, I'm going to do a quick test right here because they're having a hard time hearing me. It's because these mics are set at 2 different levels, so we have to constantly adjust them. So I'm going to actually prompt you with the questions, and I might have you read it back out loud, okay? So I'm going to give you
Well, then you got to put it up there because I won't remember it.
I'm actually going to give you my phone.
Oh.
It's going to be easier that way.
Okay.
To see it.
Oops. Got it.
Again, sorry about the audio issue, guys. We're working on it. I apologize.
Okay. When it's okay. All right. So Jild047 asks, I know this isn't the full event we've been preparing for. So what is your estimate of when it gets worse? I mean, I want to see how we finish this week and next week. I want to see what happens with the Federal Reserve. And what I really want to see is how the public is responding to it. Because that's what's going to tell me when it's the full event. It's that loss of confidence of the public that is the big trigger. If they can keep things quiet, like I've recorded, I have to watch it. But, are you hearing much about what happened yesterday on mainstream media? I'm not. We're looking. We're not seeing much. So they're keeping it quiet to the public so the public doesn't react. That's what we're waiting for. What's the estimate of when it gets worse? I mean, honestly, it can be worse this week or next week. Let's wait and see. But we're very close to that. And what to do with 401k? Cash out, pay the taxes, buy land? Well, if you're still working at that company, you're probably not likely to have the ability to cash out that 401k. If you are no longer working there, yeah, why are you leaving it in there vulnerable? But you got to do whatever you're comfortable doing. If you are still working, you might want to check and see with the administrator. You have to check with the administrator to see if you can do an in-service withdrawal, roll over election, convert up to, well, I don't know what that number is now, but the last time I checked, it was up to $50,000 or 50%, whichever was lower, that you could transfer into a traditional IRA. And then from there, you can pull it, pay your taxes, if there are any penalties, what have you. Understand that the strategy is designed to recoup any and all of those costs. So you can just call us and we'll explain it. And I need the Face ID because I don't look like you and you don't look like me. Okay. Thank you so much. All right. As a Canadian, would a stock crash affect Canada the same way it would affect the U.S.? There is no place that you can go to get out of the way of this. That is the point of being prepared. And that is the point of community coming in, because quite honestly, I 100% knew the system died in 2008. And I started preparing then. So I could tell you that I'm more prepared than probably anybody else that I know. And I still don't feel fully prepared. But it's not going to matter where you are in the world. And in Canada, your government is not holding any gold at all. So it's kind of, you got to become your own central banker. You've got to hold physical gold and physical silver to protect yourself, or even as a Canadian in a country that does not hold any physical gold. You think it'll be even worse. And I can't sit here and tell you, it's again, swipe up to, yeah, this is not working so well. Okay. But yeah, I think you might do, it's probably even, no, everybody needs to become their own central banker, period. Okay, and what do we do if we have bonds, savings accounts with large sums of money? Do we pull or leave in account? Well, once the Federal Reserve starts their money printing press again, it'll probably be higher than what they did in 2020. Here, you can have that back. It'll probably be higher than it was in 2020, which means that the value of what you're holding in all of those savings accounts and those bonds, which are debt, is going to go down. Now, if the Fed does indeed, which I think they probably will, and if they pivot, let's see how big that changes, because right now, all of those bonds, depending upon when you purchase them, but all of those bonds are likely to be greatly underwater because they held zero interest until for 15 years, right? So when they lower the interest rates, the value of those bonds are going to go up. So with the savings accounts, you want to keep enough in there so that your account is open and it's accessible for any direct deposits or any direct withdrawals. But goodness gracious, have we not seen banks recently go, nope, you lose all access to your accounts. So frankly, you probably want to be diversified in how you're holding it. And why are you holding so much cash? I hold more cash than I like because I'm running a business. So maybe that's your answer too. You're running a business. If you call us and you talk to one of our strategy specialists, then they can help you determine how much you need to keep in that bank account, how much cash do you need outside of that bank account, this is how I hold my emergency savings. I don't have a savings, I do. I have a small savings account for taxes, but the one to ensure that I can always pay salaries and things like that, I have a certain level of cash, I have a certain amount in the bank account, but most of it is right here because I want to make sure that I can continue to pay my employees and pay my bills, etc. So you need to call us and we'll help you determine what that is. But no matter what anybody says, including us, you always have to do things to your level of comfort. I can just tell you what we've done. So you can also call us at 833-GLD-ZANG, which is 833-345-9264, and get in as quickly as possible to talk to somebody. If the links are all booked for the appointments, call us. We'll get you in. We'll get you in. I promise. We are working our butts off to help as many people as possible, and this is important. So, do you want me to just read it from the screen? Okay, so now these are from you guys. Ren Pixie asks, besides purchasing, psychic, but it's physical metal, is there anything else a senior or fixed income can do to preserve wealth? Well, become part of a community, honestly, so that you're not so dependent upon the system. And I really wish I could say, well, yeah, you can buy an annuity and that'll guarantee you income and don't worry about it. You got Social Security. They're going to keep paying that. The problem is not whether or not these entities are going to keep giving you dollars. It's how many you're going to have to use to buy your food, your energy, your security. So coming together in a local community can ensure, because there's all different kinds of wealth, and you want to make sure that you're secure in all of the areas of the mantra: food, water, energy, security, barterability, wealth preservation, community, and shelter. I'd like to tell you something different, I really would. And when I can, I promise I will. But right now, and there is a strategy to deal with the fixed income piece. right? So, but it's going to be different for everybody. You're on a fixed income. I'm still earning income. Others are still starting out in a career. Some have a 401k, etc. So the point is that everybody's circumstance is just a little different. We are, in the design of our strategy, which is based upon those repeatable patterns, we're going to help you define what's right for you. And then of course, the whole goal is to give you all of this information. That's why I have all the links on my videos. Don't take anybody's word for anything. Do your own due diligence. But if I had my druthers, then my druther is that you get to make an educated choice that puts your best interest first, because you're the one that's going to be most impacted by it. Not me, you are. So we'll take the time to make sure that we can help you define those goals and help you create a comfort level so that what you do truly puts your best interest first. That's what we do. We put your best interest first, and we want to help you do that too. What a concept.
We had a question about that. How much does that cost to talk to a strategy specialist?
Zero.
Oh, so it's free.
Yes, it's free. Yes, it's free.
Okay. Yeah, it's free to call, guys. Give us a call.
Yep. And DJ G009, 009, am I going to have to build a bunker in the mountains soon? Well, DJ G009, if you haven't done it already, you're probably kind of out of time, right? For me, and I know that seems funny because we live in this country that seems to be, not so violent or what have you. But during 2020, I went to bed one night with a gun because there were riots at the Capitol and there were riots up at Fashion Square near Paradise Valley and in Scottsdale. And I realized the hole in my personal strategy. And look, has my family thought that I was out of my mind for doing all of this preparation? Of course they did. Now, some of them actually, yeah, I think miracle of miracles, probably all of them have finally changed their mind because it's more obvious what's happening, right? But what I suggest, rather than building a bunker out there, because I don't think you have enough time to do it. I've been working on this farm in Central Phoenix since 2010. That's when I bought the property. But the bug out location I bought probably 2021. It took a while to find it, just like it took a while to find this. 2021, and I have been voraciously working on it. So if we need to be at that bug out location by the end of this week, and I promise I will tell you when I go there, if we have to be there by the end of this week, everybody in my community has a full tank of gas. Everybody can get there. I have plenty of food. Yes, unfortunately, at this point, there will be a lot of people sleeping on the floor in the cabin. There will be, because I don't have enough other private homes or private places built yet, but I can accommodate 40 people. I can feed them and I can house them. That's pretty good. That's pretty good. And I got lots of toilet paper up there too. And Joel Dahl asks, is it better to buy just dimes and quarters for constitutional money? Well, I like a variety of sizes because it kind of depends on what you're going to do with it. So, yeah, I love the pre-64, but I'm not as concerned about a silver confiscation as I am about a gold confiscation. I do like dimes because it's easier to put two dimes together than to break a quarter in half. But you also always see me with this tray of sterling silver, flatware, chopsticks, whatever it is, iced teaspoons, whatever it is. So gold and silver in any form is monetary at its base. And if I had to, look, well, that's not one, but I saw one that was kind of bent and funky. I don't know, it's in there somewhere, right? Am I going to care if I have to snip off a piece of silver for that? So you want to have a variety of sizes so that you have more options. But gold and silver in any form, and I definitely do like junk. I definitely do. The pre-64 junk, dimes, quarters, half dollars, and dollars. But I'm not so concerned about confiscation around silver. So I'm good with rounds as well. I mean, this is a Canadian maple leaf. Why do I have this? Let me tell you I have this. Because my son-in-law is Canadian. And so he likes to give these at Christmas. So I just bought a bunch of them. So when he says, Mom, do you have any Canadian maple leaves? I go, I sure do. So that's actually why I have them. But I have a whole bunch of. I have silver American Eagles. I have the Austrian Philharmonics, which my personal opinion is they're the prettiest ones. And I have a lot of junk. So anything. On Guard says, I read that there are about 150,000 people leaving high school, college each month. Adding this number to the number of unemployed each month. Would not America need about 300,000 new jobs each month? Well, yeah, and that's kind of what they're anticipating, or what they're hoping for is about 244, I think, was the number that they used. And they were anticipating a slowdown anyway to 177,000. And what we got was a slowdown to 144,000. And my bet is it's even worse than that, because what does the government do but jury-rig formulas to make it look better than it actually is? So, yeah, we're already in recession. It's not official, but let me tell you, we're already in recession. And Darianne asks, question for Lynette. Is it possible the bank bail-ins happen before the overnight reset? Yes, they will. They definitely will. Could banks limit my access to gold proceeds to pay off the mortgage? Well, the answer is banks, really, if they're holding your money, if you don't hold it, you don't own it. And so, yeah, they can just go no. So the strategy is when we get that first overnight revaluation, that's why I'm not waiting. I mean, on average, we'll have about 9 months with the gold up at that level. But why wait? Because maybe it's only going to be a week. Maybe it's going to be 12 months. We don't know. So you really want to do it boom, boom. You want to convert it and pay it off that fast. I will give you fair warning when I'm going to do it, but I'm telling you right now, I'm not going to wait to see it go high. I don't care. If it goes up 3,500% or whatever, it's not going to matter to me, because I understand. I think, and everybody in this room, we've got 3 other people in here. Do I think different about money than you guys?
No.
Yeah.
Oh,
No.
yeah. Oh, yeah. Oh, yeah.
No. But this is where I live my life. So yes, the bail-ins will happen first, way before that. The hyperinflation will happen first. That's why you have to have the gold now, because once that hyperinflation kicks in, you're not going to be able to do it, right? You can look at those exponential charts. Even on the spot market, it's going to spike. But it still won't reflect the true fundamental value. It'll start to when we do those overnight resets. Improving America's homes question. Are you going to endorse Trump, given he is talking about returning us to a gold standard and decrease crony capitalism regulations? You guys know I do not get political. And I do not get political because it doesn't really matter who's in office. When you go back and you look at the loss of our rights, it didn't matter whether there was a Democrat in office or a Republican in office. So I never get political for those reasons. I've just become my own central bank. That's all. Then it doesn't matter because I'm already on a gold standard. And you have to understand this. Originally, the strategy was on the other side of this reset when they put a component of gold inside of the new system, and it has to be convertible. If it's not convertible, then forget it, because they can do anything that they want, right? We have to have the ability to hold these guys' toes to the fire. Then originally I was going to convert most, or at least a chunk other than my legacy gold, into the new fiat, etc. But with the advent of the surveillance economy and the CBDCs, where the Fed and the central banks are telling us, then we can have our finger on the button of the economy 24/7. Yikes. So what I'm going to be doing, and what I suggest all of you doing, and again, this is built in layers, the whole strategy is built in layers depending upon what's going on, is I will be converting what I need from my gold into dollars to pay that off. And I'll probably do it on a monthly basis. I don't know, I might need to do it on a weekly basis. I'll let you know as we move through this, because that's unknowable until we get there. But I will not be converting the lion's share of my gold into the new currency unless it's convertible. And then I'm going to wait and see how much they're going to abuse that button and those interest rates, because they say then there are no limitations to how low we can push those rates, which actually means how quickly we can eat up your principal. Not okay with me.
You mentioned real quickly becoming your own central bank. And I know I'm quiet, guys. I'm trying to yell a little bit. Someone asked in the comments, what does that mean to become your own central bank?
Okay, what that means is that you have your gold reserves and you have your silver reserves. And these hold your purchasing power intact, which means these retain your choices and your ability to be independent. So when I say become your own central bank, you hold real sound money, like you're seeing the central banks accumulating more gold than they ever have in history, so they can retain their freedom and their independence. That's what I'm talking about. You can control your own purchasing power by holding it in gold. Did that make sense?
It does to me.
Okay. If I give you an answer ever and you don't fully understand it, and it can be the answer to a different question than even you asked, let me know. Give me an opportunity to explain it a different way. Okay. And this is Cindy, 2 parts. At Lynette Zang, would you change any aspect of the strategy if you were living in a BRICS country? No, I would not. No, I would not. This is a universal strategy. That's why you hear me talking about it so much and sharing more than I ever could before. You know, I can share this, and so I am, because everybody all around the world, there'll be a little tweaks and nuances, right? But essentially, everybody needs that secure foundation to be as independent and self-sufficient as possible. So no, I would not. I would tweak it, just like we tweak it for each individual here, because we're all just a little different, but the basic strategy would be the same. And definitely the layered approach makes the most sense to me. And for people living in gold-producing countries outside the U.S., for opportunity positioning, would you recommend holding gold in local mints or pre-33 U.S. mints? You have to look and see if the government has a history of confiscation or a history of threatening confiscation, because let's say in Australia, which I am going to be there live on November 30th, we have the dates finalized, and we will be posting that event coming up on all of our socials now that we've gotten the particulars. We've still got a couple things to work out, but not the show. That's going on. And Australia is a very gold mining heavy country. So people, they kind of call that a commodity-backed country, but it's not. It's really not. So, and even though there was a threat in Australia of gold confiscation, my understanding, so if I'm wrong, let me know, but my understanding is they actually never went through with it. However, they did threaten it. And as much as I love Australians, and I do, I adore you guys, I can't wait to go back there. The heavy-handedness that I've seen with the government through COVID and with digital IDs and all of that, I'm thinking you should probably have it in some form of official collectible. US pre-33s, that is classified as a collectible. Maybe I'll do a little bit of research and see if they classify that in some place like Australia. Right? Pre-33 classified as collectible. Because it is a global market. I mean, that I absolutely 100% know. So I'll come back to that. But can I go back to the question, please? Okay, so for opportunity positioning, it probably not in local mints because that would be easy to confiscate. Let me come back to that. Let me just come back to that one. Okay, and would a strategy, Susie262 asks, would a strategy consultation with Lynette be able to assist us Aussies? I'm working on that. I am totally working on that. We made some headway. So stay tuned, okay? I will let you know as soon as I can say something officially, I will, but I'm working on that. And CM asks, what is the soft landing? Okay, so the soft landing that they were touting was that the jobs would decline and inflation would decline without going into a recession. So that they were controlling interest rates to make this happen with everybody, lots of people losing jobs, but there's no recession. It's never happened historically. So that's what their soft landing is making everything look hunky-dory, although to the people that lose the jobs, probably not so hunky-dory. But keeping control of inflation and losing and the loss of jobs, putting pressure on people having the ability to ask for more money, right? That's a soft landing, and it ain't going to happen. It has historically never happened. Not even one little time, and it's not happening now either.
Just in case he was asking, I think he was asking, or CM, sorry, was this the soft landing? What happened this last week?
Oh,
right.
No, no. This is not over yet. Stay tuned. There's at least that we know of they're saying $4 trillion worth of that yen carry trade that yet has to unwind. So that $4 trillion came out of the yen, but it went into stocks, it went into bonds, it went into real estate, it went into wherever, the derivatives, so this ain't over yet, regardless of what the markets look like today. And Boone22 asks, at Lynette Zang, will all federal and state pensions be stopped? Probably not, because if they stop those pensions, you're going to know about it. And you might not like it, so you might push back. They don't want pushback, right? They don't want you to understand what's happening. So, big deal. So they print more money to give you the money that they said that they're going to pay you. It doesn't matter how much of this stuff you get. It matters what you can convert it into, right? So why stop it? Why stop Social Security? I know they always threaten this. So that's one of the ways, the tools that they use to get you to do what they want. But that's why it's really important for you to become your own central banker so that you can convert the money as you need to, not depending upon federal and state pensions or Social Security or Medicare or any of that stuff. Because I think they're going to keep paying it because they don't want pushback. But you're just not going to be able to buy anything with the amount that they give you. And Arson Fire and Brittany Drummer asking about Japan. Japan first, who is next, and what's going on with Japan? Well, there's so much that's going on with Japan, and I've talked about Japan so much over the years. But it's the yen carry trade, but it's also infiltrated into the Mexican peso, right? It's one currency against another currency. And what's happening with Japan, aside from their alphabet soup of manipulation in debt and interest rates, when the interest on their currency, it's been so low for so long, lower than most other countries' interest rates. So corporations, hedge funds, governments would go in and borrow Japanese yen. Convert those Japanese yen into US dollars, and then go spend those dollars in anything that would give them a higher yield than what they had to pay to borrow the yen. So then they take that money and they buy stocks and they buy bonds and they buy real estate. They buy whatever derivatives and they buy whatever they want. But those companies and those hedge funds and those governments don't earn yen. They earn dollars, they earn euros, they earn other currencies. And when the yen is getting stronger against those currencies, then there's no limitation on the losses because those entities have to go out and buy yen. So what used to be cheaper is now a lot more expensive. You can kind of think about, the same kind of thing, similar kind of thing happened in Europe with the Swiss franc and the euro, right? So a lot of people that live in Europe at a point where the Swiss franc was weaker than the euro, took out mortgages in terms of Swiss francs because it was cheaper. But then the Swiss franc got stronger against the euro. And guess what? All of those mortgages that were so much cheaper were then a lot more expensive. And so there was the crisis, right? So this is kind of similar to some of the things that happened back in 2008, to be honest with you. But that was 2008, the system died. It's been on life support. It was not healed. It was not fixed. It was not corrected. But that's what's going on with Japan, and the fact that the government and the Bank of Japan own most of the stocks and most of the bonds on those markets, and those markets are still tanking. That tells me that the Bank of Japan is losing control, as are all central banks. And keep in mind this too, because this is really so important. We have talked ad nauseum about how the central banks were moving forward in a coordinated way since 2008. All raised the rates the same, all did this the same. It was a synchronized move with all central banks working together. But now, Bank of Japan is raising rates. This is the second time in, since 2008 that they've raised the rates. Well, the U.S. kept the rates the same. Other countries have lowered the rates, no longer moving forward in a coordinated way. But the financial system is so much more fragile than it was in 2008. And the central banks have so much more debt and garbage on their books, and they have no movement in interest rates. The Federal Reserve raised rates so they could drop them down. Now we have to see what's going to happen with that. But that's what's happening in Japan, and it's really happening all over the world. And it really is. This crisis is just, I hope it's obvious enough for everybody to take heed. That's the thing. What's it going to take to get people to fully move and stop trusting this crap in the bank? Because it shows that you have numbers. 1 trillion times zero is zero. That's just simple math. So arson, fire, we did that. Low blood pressure, Q. Why is market falling alongside with treasury yields? Yes, you see, the lie is being uncovered. Because what they wanted you to think is, wow, if you have stocks, you need to be diversified into bonds, right? So if the stock market's going up, the bond market's going down, and vice versa. But the problem is that both of them are made up of this, and it's garbage. So the reason why you see the stock and the bond market going the same direction, and this has been true for a little minute now, is because they're all made up of dollars, which are in deep doo-doo, as are every single fiat currency on the flippin' planet. So it uncovers the lie. You want to be diversified? Ba-bam! Diversification. Ba-bam! Diversification. Intangible? Tangible diversification. That's what's different. They're the same. Deja Vu asks, why aren't diamonds and precious gems more valuable, i.e. De Beers mining? Well, okay, they are, and they've certainly gone up in nominal terms, but diamonds and precious gems do not have the same kind of qualities as gold and silver. If you make that diamond smaller, it loses a lot of its value. Whereas, look it, this is 1 ounce. This is a 20th of an ounce. In the gold backs, they can have a 1,000th of an ounce because you can roll it out really thin, and it still has more value. Diamonds and precious, and you see, I wear them, I love them, right? But they're not monetary, and this is a monetary life cycle issue. And that's also why you don't really ever hear me talk about platinum, which is industrial. Primary currency metal, secondary currency metal. This is a currency life cycle issue, so I stick with the currency metals as far as that goes. Now, and I mean, I do have precious gems too, but that's because I like them and they work with my ensembles, just like all my glasses. Because somebody asked how many glasses. Stay tuned. We just did a reel on that. I'm not sure when it's going out, but you can count them.
Someone said in the chat that jewelry prices right now are going crazy. That's gold and silver, not necessarily those stones you're talking about. Does that sound about right to you?
Right.
Okay.
Yeah, that would be right. But also, as the currency loses value, I mean, why is that loaf of bread that much more money, right? So it's all relative to the purchasing power of this, which is the real trend. And Silent Silver, question. Should I roll over my 457 to gold IRA and buy gold from it, or just take the money out and pay all the penalties and then buy gold and silver and have it physically? Well, let me tell you that you need to do whatever it is that you are comfortable doing, but I personally took a distribution from my SEP IRA and I put it all into this. And there are a couple of reasons. Number one, we absolutely know that gold is severely undervalued. And we also know if you don't hold it, you don't own it. Now, if you do it inside of an IRA, the only kind of gold that you can buy is bullion. Bullion, if there is to be an overt confiscation, there's been tons of covert confiscation, but if there's to be an overt confiscation, then it's pretty easy to take it away from an IRA because you're not holding it, right? And the administrator is not likely to go, oh, wait. So they set up the taxable event. So you're looking at your account, you've got $100,000, you're going, I don't want to pay those taxes. But at some point, it doesn't matter. You're going to pay those taxes. So I personally, we as Zang Enterprises, well, if that's what you want, we can do that for you, right? But I personally don't have it because and all good citizens always pay all taxes that are due. But I have a lot more control over when and how I pay them if I'm my own central bank and I'm choosing when versus if it's held at a depository. And when you will pay your taxes when you take that distribution. If you hold a physical gold, silver IRA, that distribution is classified when they ship. I don't know what that time period is right now. The last time I checked, from the time that you requested it till the time that they physically shipped it was about 3 weeks, and that's when they would determine your distribution. So you are buying it severely undervalued. All you can do is bullion. That's why I think that if you want to know what kind of gold to buy, look at what you can buy inside of an IRA and don't buy that. I mean, that's why I tell you that, right? You want to own the kind of gold that you can't do in an IRA because that's a lot more private and it's a lot more invisible. The system, the strategy, sound money strategy is designed to recoup any of those taxes, any of the fees, any losses, anything. So you do what you're comfortable with. I can't tell you what to do, but I don't own my SEP IRA anymore, but I still have a nice retirement plan. And James Miller asks, thanks for all your work, Lynette. It is my pleasure. Thank you for showing up, by the way. Thank you for being here. You've probably addressed previously, but when the time comes to sell pre-1933 gold and silver, would the collectible value be part of the sale price or just the spot price? Also, I've heard speculation that the window to capitalize on the price of gold at that time could be as narrow as a couple of weeks. What are your thoughts? All right, let's take one question at a time. Okay, address the when it comes time to sell the pre-33 gold and silver. Oh no, heck no. There will be a huge, most likely, there will be a huge premium in there because it kind of works like this. Let's say we're at an auction and there are 10 people at this auction and there's 10 of whatever anybody wants on that table. Okay, well, wherever the auction opens up, that's what everybody's going to pay, and they're all going to walk away. Then they paid that one price. However, let's say you have one, and all 10 people want it. Well, whoever is willing to pay the most will get it. But then you still have 9 other people that wanted it. So the premiums, especially if this is the only form of gold that you can hold legally and use in the normal marketplace, what do you think the premiums would be? Historically, maybe we can put that link in the description on the kind of gold to buy.
Absolutely, I will link that for you. Absolutely.
So what you're going to see when you look at that is that the smart money, those 1%ers, those that are in the know, these coins are making all-time highs. That answers that question. Have there been dips? Sure, because there's been time when they've needed this gold. I've done it too. Remember, I've been in these markets on some level my entire life. And when I first got divorced and I had babies, I'm going to be honest with you, I was kind of broke. Right? And I needed some money to keep a roof over her head, keep feeding the babies, etc. Right? I sold some of my stuff to be able to maintain that. So there are times, where you've got your emergency and you want to have something that the market will buy. And there ain't no fever like gold fever. And we're just in the beginning of that. Just in the very beginning. So yes, these will hold its premium. The premium's going to shift from higher to lower. If you look at that video, that link on the different ways to buy gold, you're going to see that while in the ultra rarities where only the 1%ers can live, all-time highs, all-time highs, all-time highs. But in the classification, because this is not in that category, In this classification where, you can't hold pricing to me because I'm not really living in that world and I can't tell you how much something is, but it is still far below the all-time high that was hit in 1989. So we got a ways to go with that puppy, and I believe that we will see that yet again. Absolutely. And Callie Kitty asks, if I can retire now from the federal government, should I do it and cash out my TSP, the 401k in parens, and turn it into gold? You do whatever you want, Callie, because you've got to do what you're comfortable with. But if it were me, yes. And I say that because that's the choice that I made. Even though I wasn't working for the federal government, I did cash out my retirement plan and put it into this. And Richard R. Briner Jr. asks, holding Bitcoin since 2017, should convert to gold? Because it's just going through that test. And in fact, I'm going to do a short with Chandelier afterwards, because even Wall Street is recognizing, even though they make it look like gold, Bitcoin is not gold. So the answer is yes. Get it done. Yes. Although, wait, let me back up. You do whatever you're comfortable with. I can't tell you what to do, but I don't own any Bitcoin. I do own a lot of gold. Because gold's been tested for 6,000 years. Bitcoin, this is the test, babes. This is the test. And Maniac asks, oh, what happened? Recession canceled? LOL. Peeps, stop panicking for everything. And I've got to agree with that. The recession has not been canceled. And actually, for some, they are in the recession, even though they haven't yet made it official. But I do agree, stop panicking. Just get your strategy done and executed. I'm not panicking. You did not see me run up to my bug out because the markets did a little implosion, but you will see it when the public recognizes what's happening. That's when you're going to see me go to the bug out. So I'll keep you posted on that. And Hugo Preciado asks, what about platinum? Would it be a good buy? Prices are down. Well, platinum is a very rare metal. In fact, it is more rare than gold. However, it is an industrial metal. And so if we are going, and we are, if we're going into a global depression, that's one of the reasons why you're going to see platinum down. Platinum used to trade higher than gold. In fact, I bought some when it first dipped below and then it went above, blah, 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 blah. But platinum is an industrial metal. This is a currency life cycle issue. Gold is the primary currency metal. Silver is the secondary, so that's why I stick with that. Though, truthfully, this is platinum, so I do own platinum as well. And Gina Young asks, hi, Lynette, can you please explain all the things behind you? I know, it is my very pitiful attempt to represent the strategy, the mantra. So we have food, lots of food, water, energy. I don't know. You guys stand up. You can be my security, or maybe point the finger to the security shutters, right? Barterability, wealth preservation, community, and shelter. I know, it's pitiful. I'll do better. We're working on it. Give me a minute. And Space Cowboy asks, how long can you see gold and silver going before they really take off? Well, first of all, I don't ever expect Wall Street to give me the real value of any asset, period. It's a trading value. But what will happen, and when we will start to see it move toward its fund, doesn't mean it's not going up from here, by the way, on the spot market. However, when I expect to see it start to enroll to its true fundamental value is then that overnight reset. okay? Because that's when governments and central banks are trying to regain your confidence in their currency. So that's how they do it 100% of the time. Could this time be different? I suppose so. I mean, they always want you to think this time is different, but it never is. So that's when we're going to see it. And I think before they really take off, first of all, I think that's already started. We've had a number of breakouts to new highs, even in the manipulated spot market, though the first breakout came in the ultra rarities with the smart money. Second breakout came in this level of the collectible market, because both of those are physical only, and then the spot market complied, right? So if you want to know what's happening in the gold market, look at the physical only market for a true indicator of what's truly happening. But the gold fever's already begun, and we're seeing it. I've shown you in China and in Korea and in the U.S. I mean, come on, Amazon, Costco, Walmart. The public is recognizing it. So I think it's already begun with the breakouts and with the demand that we're seeing, but I think we're still very early in it. So it's a great time to be positioning. And the old guy asks...
Real quickly, I want to ask a question, because you talked about a breakout in the 90s? Is that what you said? A breakout in the 90s? That was higher, what was it, 70s? That was higher than our current highs, is what you said.
Oh, well, what I was referring to was in the purely collectible market. And if you have... Do you have a graph that you can show? And
I can't put it up because it shares my screen.
Can I put it up?
Yes, you can.
Okay.
Absolutely.
Okay. Hold on, you guys.
We're going to pull up a graph, and I'm going to take this second to adjust the audio, so maybe you guys will hear me better.
Okay.
How about now? What do you
Close
do?
this
Do you hear me?
down.
My name is Adam. Hello.
And let me open this.
And I will follow up just real quickly, Lynette, with the question itself, which was, what was driving those highs at that time? So whenever you get the chart pulled up, we'll switch to that screen. But tell me, the reason why I'm asking you is, what's driving the highs now? We already kind of know that things are changing, and they're not at all-time highs. What drove the highs then?
I can show you that.
Perfect. Thank you.
Let's see. Oh, crappy dappy. How come I'm not finding it?
Thank you, Boone, and thank you for telling me my audio is better. Sorry, guys.
Give me a second. This is going to take a little bit longer than I thought.
Silent Silver is asking, a good place to live in AZ that's not too hot and expensive? Well, I mean, anywhere up north, really. But
right.
Even then, it's still kind of expensive up there right now still. I mean, it's going up, but yeah. I mean, any suggestions, Arthur? Prescott, yeah, Prescott's a good place
I
to
like
be.
Prescott.
Flagstaff's really nice too. Absolutely, Flagstaff's really nice. Silent Surfer, I love. Payson is still hot though. I am burning up in Payson when I go there. I mean, it still hits above 100 degrees regularly over there, but it is nice at night. I mean, we went camping there a couple weeks ago, and it was 40 degrees at night. So,
I'm sorry, you guys. Oh, this is just being so uncooperative. You know which one I'm looking for is the different kinds of gold and silver, and for some weird reason, it is just not picking it up, even when I'm trying to browse.
Brian, yeah, I love Williams too.
Okay, can we just hold on to that?
Yep.
Okay.
Yep.
Because
we'll come back to that.
I'll just write it down here, and I'll answer that next week, and I'll show you with the graphs.
And it was a question that just hit me. I'm sorry about that. It was something that hit me. I'm thinking, okay, well, what caused that? That spike at that time. I'd like to see if there's
I can absolutely address that.
I know you can.
Okay, I will do that. I will do that, and then you can see it. I'm sorry, it's just.
That's all right.
Not cooperating, and it's going to take me longer than I want to take. Okay, the old guy, I'm the old gal. So the old guy asks, The only time I've seen gold on food was a micro-thin coat for conspicuous consumption. Absolutely. Does gold actually have a food health value on consumption? Actually, it does. There is, just like there's colloidal silver, there's colloidal gold. So yes, I agree with you that when I've seen it, it's been super thin little flakes that we eat, but it does actually have a health value. It is antifungal, it is antibacterial, and it's actually good for you. I am not suggesting you eat your coins, but yes, it actually does. And Kevin DeBella asks, I have a retirement account at my job I can't touch till I leave. Been looking for a new job, but I can afford to leave now, cash out, and use savings till I find something. Good idea, bad idea? Oh, I can't answer that one for you. I know people that have definitely made that choice, that have decided to retire a little bit early so they could access their accounts and position into gold and silver. But in this environment, do you need that job? I mean, I don't know. Are you ready to retire? I think that if you call us and have that conversation one-on-one, maybe by the end of that conversation, you'll be more clear on what you should do that's going to support you. If you choose to stay, which is fine, then you just want to make sure that whatever you have set up is protected and properly diversified with your gold. And okie doke, Alu Hutchin, sorry, if I butcher anybody's name, I'm so sorry. Lynette, the gold certificates are 127 to 1. Does the price of gold physically go up or down as soon as these certificates become less? Not really sure exactly what you're talking about, because like I have a $10 gold certificate in here somewhere. Let's see, there's a $1 silver certificate, and here's a $10 gold certificate right here, and it's actually demonetized. So if you could be a little bit more clear about what's the 127 to 1, unless you're referring to the debt clock that says paper gold to physical gold, in which case that's a lot. It's actually much worse than that. But does the price of gold physically go up or down as soon as these? Yeah, I'm not sure what you're.
If you can,
I'm not really sure exactly what you're asking me.
Yeah, if you wanna re-ask that again, I'll present it in front of her, make sure that we get it again for you. So if you want to ask it in a different way, maybe we'll grab it and we can understand.
Okay, sorry. And Arlie Medina asks, at 67, retired, have some gold, silver. What should I do with my 401k? Whatever you are comfortable doing, but your 401k is made up of this. Have we not even recently seen banks go up? No access. Look, I don't trust the system. Do you trust the system? I don't. Become your own central bank. I mean, do what you want to do, but become your own central bank. Don't leave it to Wall Street. I mean, honestly, do you really think they have your best interest at heart, or that they use your equity for their benefit? You're taking all the risk. You're paying all their freaking fees. And they can say, "Oops, no," because you don't really own it. It is only your perception. Why would you leave it in there? You do what you want. I'm not going to judge you for it, but I made a different choice. I took my retirement out and put it in this. And Kirk Adams asks, if markets decline again, which I'm sure they will, because we still have, I don't know how many trillions to work through. Nobody knows how many trillions we have to work through. But if markets decline again, do you believe gold will decline also by the dip? The spot gold market can decline because if people, and they have, if hedge funds and different entities have actually borrowed, right? It's the same thing as the yen carry trade, right? You're borrowing over here and you're investing it over here for a higher yield. Okay, well, that only works until it doesn't. And the problem is it doesn't work anymore. And you're making me dizzy. But you could certainly buy the dip as long as the premiums stay down on this for your raw gold, for your emergency gold, for any of this. It is a great time to be buying before those premiums expand a lot. So can I go back to the question? Yeah, buy the dip. Buy it today. Buy it, buy it, buy it. Yes, of course. Call us. We'll help you. We'll help you get the kind of gold and the kind of silver that supports your goals. Because that's what we're going to do first. We're going to help you define what you're trying to accomplish. If you already know that, awesome. But a lot of times we find that people aren't really quite sure. So we'll help you, and we're not going to tell you. We're going to help you define that. And then it's the right kind of gold and the right kind of silver for what you're trying to accomplish. It's that simple. 888, they're all pointing at the screen. 888-833-833. Let me say that one more time. 833-GLD-ZANG. So 833-345-9264. Oh my gosh. Well, you know, you got to have a little bit of levity. I mean, you really do. It's why I surround myself with pretty stuff, because I live my life constantly in such ugly, crappy, nasty stuff that I need a little balance. So I don't think a little bit of levity is a horrible thing. And Semi-Successful asks, in terms of credit card companies, when the CBDC is implemented, do you see credit card companies having the most financial gain from it when it comes to their fees and overhead? 100%. 100%. Because they, you know what central banks want us to believe? Going below zero is a choice. But when we go into the CBDCs, they can cut those fees down so low so that they're charging you more, but you can't quite see it because of all of the numbers past that decimal point. So 100%, yes, the banks and the financial companies and the credit card companies will totally, anybody that gets to charge you interest is going to be to their benefit. Absolutely, 100%. Yep. Are we done?
We have some more questions in the chat that I missed them, because there was a flood of them at one point. So I'm going back and asking everyone if I've missed any questions. Low blood pressure asked one just a second ago, and make sure I'm getting this right. Low blood pressure. Appreciate you being in the stream again today. Why can't we sell gold anywhere at its fundamental value? And I guess he's saying, they're saying now. Right? Like, why can't we sell it at the fundamental value now?
Because the markets aren't recognizing it yet. We're still in the point, a rising gold price is an indication of a failing currency. So it benefits Wall Street, it benefits the central banks, it benefits the governments for you to think it has no value, right? And I want you to think about this. This is an American Eagle. I own one. This is it. Just because if I'm going to talk about bullion, I got to show it to you, right? What's the face value of this coin? Oh, $50. Can you buy this 1 ounce gold eagle for $50? Nope, you can't. So psychologically, and by the way, all of the U.S.'s gold holdings are held at that official price of $42.22. So the reason why we are not seeing gold expressed to its fundamental value at this point is because it benefits the central banks and the governments and the trading, Wall Street's trading machine, to have that price suppressed. just like they have converted every single asset into a trading vehicle. Well, gold, they came out with the spot gold market in the 70s, right as they were legalizing and taking gold out of backing our currency. So that's why, because at this point, it benefits the government and the central bank to have it suppressed so you don't realize that the currency is going away. It is the same exact reason, because it's all about you guys, it's all about the public. When they do that overnight revaluation, right, against gold, and it begins to express to its fundamental value, it is about getting your confidence back in the currency. Right? So right now, you still have confidence in the currency. You're still willing to work for this, use it as your tool of barter, even attempt to save it, as witnessed by some of the questions today. You still put value in the currency, so they don't want it to go up because they don't want you to realize that the currency, that this stuff is just garbage. You'll know it soon enough when we're in hyperinflation.
Another question from Wolf. Hey, Wolf, how you doing? Appreciate you being here today. Is it possible for a mortgage company to suddenly call in a mortgage when there's a crash?
Well, the answer is, have you read that book document that you signed, right? A lot of things changed after 2008. So ultimately, the answer is yes. But typically, there is, on average, about a 9-month window in there where the contract remains. I'm not going to push it personally, right? We get that overnight revaluation. I'm going to take, maybe I'll be able to pay off the mortgage with this little 1/20 of an ounce of gold during that revaluation. So they cannot do it immediately, but they will do it. They will tie interest rates to the rate of inflation, at least historically, that's what they've shown. They will put you in a position where if you want to continue to live where you're living, that you're going to have to be willing to restructure that mortgage. I don't want you in that position. I don't want anybody in that position. So why not just buy gold undervalued now and then take as much as you need to and pay off that mortgage with dollars that have absolutely zero value? A whole lot less gold will be needed then than is needed right now. That's part of the strategy.
Susie asks, what happens to insurance? Like for your houses, for your car, what happens to insurance during
we're
all this
already
stuff?
seeing a lot of this stuff, aren't we? I mean, insurance companies
You're
are
right.
leaving. If you don't need it, they'll give it to you. If you do need it, you're not going to be able to get it. Look what's happening in California. Look what's happening in Florida. But even on, say, life insurances, annuity contracts, people will say, oh, but they're guaranteed. Well, read your contract. In big bold letters all over the place, they will put that it is based upon the claims paying ability of the company. So, and a lot of insurance companies are way underwater because they bought those fixed debt instruments, right? They bought these fixed debt instruments because they made commitments on dates and when they're going to have to pay it out, and all of them are underwater or they're not liquid. So I wouldn't count on any insurance other than your wealth insurance. That's what you want, your wealth insurance. Insurance policies aren't going to mean anything in this. I'm sorry, but it's just true.
Low blood pressure says thank you. So thank you for answering the question. And so does the old
You're
guy,
welcome.
I believe it was. He also says you're young. So
Well, I'm going to be 70 in like a couple months, in October actually. So not so young.
now, Renee, clarify this for me because I see that you commented below this that no one's been able to answer this question. I want to make sure we're answering it for you today. So
if we don't, let us know.
Yeah, just
Let's
let me
give
know
it a
and
shot.
I'll try to get it
and if
again.
I can't, I'll tell you that
And
too.
I think she said she's asked multiple precious metal people, so let's see if we can get you to answer this. So
Yeah.
what to do with all your precious metals when the banks are down and we are in the reset? Even if we wait out the reset, Where can you trade your precious metals?
Okay, so historically, this is the point in being in an asset that has the broadest base of buyer. So 100% of the time for 6,000 years, there has always been a buyer. Now, we definitely intend to be in business during that period of time, and the wholesaler that we work with has been in business for a very long period of time. So you can always convert your gold and your silver, convert it through us. Right? Convert it through us. You'll send in your gold, we'll convert it into whatever that currency is, and then you can then pay that bill, pay off the mortgage, or what you're going to do with it. Now, silver is a little bit different. So your gold, you're going to convert, most likely. There will be some instances, like let's just say that an individual owns an income-producing property and they need to sell it for any reason at all. They need to liquidate it. Well, if you have gold, at that point, when we're in hyperinflation, everybody understands that this is losing value very rapidly. So if it's an individual, they don't want this. They're going to rather have this. So you would do that as a direct transaction. And then if that person needed it, they'd sell it through us or another gold dealer or a pawn shop. I mean, I don't recommend this, but there are so many places where you can sell gold. And I will also say that the most likely outcome is that banks will be tasked with gathering your gold. So there's like thousands of dealers and thousands of smelters. And remember, it's used in every single sector of the global economy. There's always going to be someone that can convert it into that local currency. So you'll either use it direct or you'll convert it into the local currency through one of us. And that's how you do it. It's not really rocket science. And it's kind of like the same way with silver, except more with gold for property taxes, for mortgages, for chronic illnesses, to convert once we see that cup formation in stocks and income-producing assets, we will be converting it. But, I can't guarantee that, except that it's 100% of the time that's how it's happened. And I think it's going to be the same way this time. Did I answer that?
I just want to follow up because she did say that is a standard answer, but you have to realize that so many people will come and sell their precious metals with you. Do you have sufficient money to buy that? And she also, I think what she's trying to get at is that everyone's going to be broke at this time, right? No one's going to have any money as everything is collapsing, except for the people that have prepared themselves, right?
Well, and the wealthy, right?
And Renee, maybe I'm getting this wrong, but I'm thinking what you're asking is, who is going to be available to buy this stuff if everyone is broke? Who is buying this stuff if everyone's broke? Renee, am I getting that right? I apologize if I'm getting it wrong.
Is that it?
Yeah,
okay.
I believe that's the question she's asking. Yeah.
Okay, here you go. Wealth never disappears. It merely shifts location, right? So if you have something that holds your purchasing power, you have that wealth shift your way. Not everybody is going to be broke. Let's look at Venezuela. 90% of the population is in abject poverty. So if you're poor, let's face it, there's only so far down that you can go. If you are wealthy and you have the hard, tangible assets, your standard of living doesn't really change that much. In fact, because the other assets drop, you're able to expand that. It is the middle class that has not prepared for this, does not own hard assets, that have the greatest shift in standard of living. And while in Venezuela that's 90%, globally on average, that's 80%. But I didn't say 100%, did I? Because wealth doesn't just evaporate, it shifts location. So just like with NVIDIA, right? The insiders are selling that stock. They're selling it to you because you're seeing it go up and up and up, and you have FOMO, fear of missing out. Now it's dropped like a rock. Your wealth transferred their way, whoever sold that to you. And look at that rarities chart. The wealthy are converting. The central banks are converting into sound money. Even going back to the Depression. Let's go back to the Depression, right? I mean, we had people that were out of work, that were starving, the Dust Bowl, everything. But yet, we also had a wealthy person that owned Seabiscuit, that racehorse. And how much was that purse during the Depression? It was $100,000. This is during the Depression. This is when this coin, $20. So how much relatively speaking, was that 100,000? So what you're thinking is nobody's going to have any money. Well, I am, because I'm holding those hard assets. You are, because you're holding those hard assets. And people that have wealth really always want what only they can have. So that's who's going to buy it. And that's what history's shown us over and over and over. That's what we're seeing right now. Right now, we're seeing that. Did that answer your question?
I haven't seen her come back just yet. And Renee, let us know if we didn't get
Please.
it right. And we will follow up with you.
100%.
Yeah.
We are really happy to. And if you think it was a crappy answer, you can say that.
Oh yeah, go ahead. We can take
know,
it.
we all
We can take it.
Yeah, we could. And I will tell you this, right? In our little community of everybody that's helping do everything, what do I tell? I'm not even going to tell them. And there's no wrong answer in this. What do I think about your opinions?
You value our opinions very, very much.
Exactly. Every single person that's in our community has very, very strong opinions. And we don't always have to agree either. Mm-hmm. But so that's why if I haven't answered that question well enough for you, you let me know. I like questions. I like opinions.
And yeah, and I'll say, as an outsider, right, I don't understand a lot of this stuff that we're talking about. So you guys asking questions helps me out as well.
Yeah.
Really does. Okay, really appreciate it.
I love it when somebody new comes in because they're thinking more with the viewer's kind of head than they ever will even after the first day, because then they become immersed in all of this. And I've been doing this on some level since I was 10 years old. And it's like, I don't know. I do my best to explain this stuff, but you got to help me out, because what seems kind of, okay, to me could be a question for you. And that's my job, to figure out how to explain it in a way that you get it. That's my job. Or one of them anyway.
We have another question from Ken Code. In your mantra, you mentioned energy. When
Yes.
pointing to the items behind you, you said energy. You turned to your left. What are those two black jars? What are these things?
These are lights. Yeah, they're just, I'm not going to put it right at the camera because that would hurt. But it's bad. I know it's bad, but it's still energy, because you are going to need, I can't take the solar panels from my roof, although maybe we could get a solar panel. But we're going to be buying this, maybe you can speak a little bit more to that, Adam, that you sent me, this generator.
Correct.
thing.
Yeah. If you guys are familiar, there's like power backup systems. Anchor makes a really good one right now. And hey, if you have any familiarity with this item, by all means, yeah, let us know. Let us know, and we'll kind of.
We haven't ordered it yet, but we're gonna buy one,
right,
and then we'll show you.
Essentially, we
how
want to
it
have
works.
a backup for the house, right? But also, we want that backup to be mobile. This thing is on wheels, so if we absolutely need to bug out, we can just grab that thing and have a secondary power source for the bug out location.
Although the bug out location is completely off grid.
Right.
We do have a
Right.
backup generator.
Absolutely.
We absolutely do.
In this case, it's like a backup of a backup.
A backup
kind of thing,
of,
right? Which is
never have too many backups.
You can never have too many backups, right? And that's something that we're looking into to get over here. Yeah, and we'll keep you guys updated as long as when we purchase that. It'll be a really good review video that we make
100%
on the other channel when we launch
100%.
that. Yeah.
Yep. 100%.
Just want to shout out Jake's Custom Parts. He likes the live stream today. Thank you for being here,
thank you.
Jake. Really appreciate you, man. Really appreciate you.
I hope you guys, we really want to give you what you need from us and what we want. We are here to be of service. So the more input we get, the more participation we get, the better I think that we're able to do that. Because we work for you. We all work for you. I'm very clear on that. I have always been clear on that. My entire life I've been clear on that. So that's why when I left ITM, boom, the next week, even though it took a while to find us, and I think there are people that haven't found us yet, but I miss a beat because I promised you that I would be here through this to help us all, to help everybody through this, and I will be. I'm not going anywhere. And even afterwards, you're always going to have to know what's going on in these markets so they can't take advantage of you. How many times can you be lied to when you do not know the truth?
And Renee did say that you had a very good explanation, so definitely appreciate you following up with Renee. We want to We want to make sure that we're getting the answer to you, especially if it doesn't make sense. I know a lot of this stuff doesn't make sense. Jay Jones asks, Lynette, we love you so much for everything you do.
Thank you. I love you too for being there. Goodness gracious. Thank you for being part of this community.
Absolutely. What is ultimately going to happen with the stock market? And once it collapses, what will be the income producing assets on the other side?
Well, the whole market will reset. Everything will reset when they reset the currencies. So that is their way to repay this debt, that just unfathomable amount of debt with dollars that have absolutely no value. The income producing assets, and again, we're going to look for that cup formation, could be things like income producing real estate. It could be, and real estate, we can see, there is a major building in Manhattan that in 2006 sold for something like $322 million and just recently sold for, I think, what was that, like 36 million or something like that. So it'll be income producing real estate. It could be rights, right? Air rights, water rights, mineral rights. You could generate income from that. It can be a number of different things. So stay tuned because we will be talking and looking at that more as this whole piece evolves. But and it'll even be stocks that manage to survive this mess and pay dividends. So there are many different ways that we'll be looking at that, and we're going to do it in a very diverse, for myself, you get to do whatever you want. But I want a nicely diversified portfolio, an income portfolio across many different areas. So I'm holding my purchasing power intact, and then when it is time and I see that accumulation pattern, I will convert into those other assets. And I hope that answered the question. I will be answering that more and more and more as we go through this.
Last question for today. Again, everyone, I really, really appreciate everyone asking the questions. Make sure to do questions at LynetteZang.com if we missed your question today. But the last question for today is going to be about security. Mm-hmm. And the question comes from, sorry, I lost the question. Where'd you go, baby? I wanted to make sure I said the name, but I'm so sorry I lost the question. The question was, what is your point of view of security? Do you have firearms? Do you use shields? What are you doing for security is essentially what he's asking.
Well, honestly, security covers so many different things. You want to have food and water security because you can't live without those. But you're asking me a little bit more practical question, like how am I securing myself? And one way that there are a whole bunch of different ways. Again, that's in layers, right? So in the community for the bug out location, we do have people that are quite familiar, and we do have up there pretty big arsenal. I don't see myself personally having the ability to actually kill someone if they're just wanting food. I'd rather feed them, to be honest with you. But we do have an arsenal. We also have very large, nasty dogs. I also have very spiny, nasty things underneath each one of my windows. So if somebody's going to try and get in a window, they're going to pay really dear. I also have security shutters on there that you can't shoot through, you can't break through. I have, let's see, did I cover dogs, spiny things? We have glass. We don't have any geese,
And
but
yeah,
we
someone
are
in the
going to
chat
get
said
some.
Geese are vicious. So.
Geese are very vicious, and you know what else is very vicious, which we are going to try up north, are guinea fowl. Right? They are loud, they are protective, and they are nasty, and I love them. So we're also going to be doing some emus for the herd because they'll watch over like the cows and the goats and things like that. So it's a combination, and again, it's in layers. And what am I really doing for my security? Here's my wealth security. Here's my wealth security. But that was it.
That was it for today. Yes, I just want to shout out David Wallace. I love the name, by the way, from The Office. I know that reference. He says he has one of the Anchor portable power systems, and it works very well. So we got some reviews here. I think I saw another comment saying they have it as well. A reduced effort. So you've had one of those generators for several years. Great. Yeah, that's exact. I took mine camping. I had a little generator in the solar. I told you the solar panels. I went camping, and everyone was using it to charge their phones, of course, in the middle of the woods. But you know what? It worked, and I actually powered a couple lights too, which was really nice to keep the bugs away from our campsite over there on the other side, attracted to the lights. So, but that is it for the questions for today.
But just stay tuned. We're doing some planning right now on the new sites, and for those of you that used to go to Beyond Gold and Silver, it's going to be way better. So we'll be dealing with all of that. We'll have security experts come in, experts in every single area of the mantra come in and give you a whole bunch of different points of view. So this has been great. It is my favorite day because I feel like I get to commune with you and have this conversation. And we'll let you know when we're doing live events, like we're going to Chris Martinson's event in not Vermont. Where are we going? New Hampshire. And that's in September. Right. So we'll be letting you know. And gosh, if you see this event and then you come and you meet me in person, let me know. Let us know. That'll be great.
That's right. And someone did ask if we're going down under. We are going down under.
We are going down under. The event
November.
Is November. Right. And we're tentatively thinking that we're going to do some sustainable farming. We want to go to a sustainable farm there, maybe in New Zealand. We're trying to make those and a few other things. But yes, we'll be in Australia. I believe Adelaide on November 30th is the event date. So excited about. I mean, honestly, I love you guys so much. I really do. I love Australia. I love New Zealand. I love the people. Great country, great coffee, great pastries, great food, lots of great shoe stores. Really, really good shoe stores. And I know that seems funny, but we enjoyed our time there so much last year, and getting to go again this year is really exciting because I know we have to come together globally, and we have to have this quiet revolution so that we can have a seat at the table and have a say in this next iteration of money and have it be more fair and sound. There's got to be a component of sound money in it. And until next we meet, together, we can do anything. We can make a positive difference for a lot of people. So until next we meet, please be safe out there. Bye-bye. Thanks for coming today, guys.